Okay, so this is the dashboard that already went out. This was up to the end of September. So yes, this was the end of September, and what I want to do is contrast it with where we're at now. The cash has gone up from 400,000 to 483 and a half, and the net value has gone up from 434 to 516. It's not all what we've done. There is new money has gone in, but not that much new money. We have a ridiculous amount of stock buying power. So that stock buying power is at 420,000. So it needs to stay above sort of 258,000. So we've got a crazy amount. I'm looking around for trades. I need more trades. What we will be able to do now, though, is some topping up because we've got a lot more money in there. So these figures are now completely out of date. We had a whole million, I exaggerate slightly, lots and lots of different shares. We still have lots of shares, but we don't have anywhere near as many, and they're in a better position. And there are plans for all of them. When this comes out next time, it will have a new sheet on it, which will be individual positions. I've already done them for Sapphire and Fortune. You don't have to do for T's, just divide everything by 20 because they're all the same. And this one, it'll be a little bit more complicated because on this one there's been profit distributions and stuff, so I need to work out how to do it. But I will certainly have done that for the next one. The first thing to do, this being expiration week, and let me tell you that the S&P 500 is up today, and it's up by 1.65%. That's highly unusual. Normally, of course, the market falls as we get to expiration, so that's very good. It has, of course, been down. We've had a bit of a dip, and the good news was that when we were in a bit of a dip, we took advantage of that to roll forward some of our puts, for example, and to sell puts and to get better put premiums in anticipation of it going back up. Because when the stock prices are low, then it's a bigger distance up to the strike price, so you get a better price for it. So I tried to hold off so we could do some tonight, but basically I couldn't resist. I had to do them. So the next thing I want to do is go through and just look at anything that's due to expire tomorrow and make sure that we're happy with it. And then we might do a bit of maintenance here and there. So scrolling down, the first one that we come to for October is CCL, Carnival Cruise Line. And this is covered by a lid. So we've sold the $27.50 and the $25 one strike price down lid has kicked in. We've got four we've sold and four we've bought. And the present price of CCL is $23.97, call that for $24. So that's the lid will actually work for us here. We've had $5.53. The stock will be put to us at $27.50, but it'll then be sold at $25. So we will still have made sort of $2.50 or whatever. So that's a nice example of that working. The next one is CTRA, which used to be COG. It's an energy and mining, I think, company. There it is, CTRA, Coterra Energy, they call themselves. So the current price of that is $20.75, and we have sold the October $17.50. It is at $20.75. We sold a put on the $17.50 strike price. They don't want to put them to us at $17.50 when they can put them to the market at $20. So on this one, we'll just be keeping our money. Yes, it would be sell to close, but there's no money on it. So there's nothing to do. There's nothing to sell back. So yeah, so when we finish, I'll just go ahead and cancel that. That is to make sure that even though we haven't got the shares, they don't sell them for us under the lid. Otherwise, we'd have to buy them to supply them to go off under the lid, which wouldn't be a good idea. So that's October for CTRA. Then we've got EDU, which we know about, but these are $4 strike price, which we got $1.95 premium on. So I don't mind them being put to us at $4. That is to help dilute the ones that we've already got. Keep bringing them down. So that'll do that. That's all right. There's another one which is FE, and it's another one that the lid has clicked on. Current price of FE is $36.24. So they could well be put to us at 40. They'll immediately be sold for 39, and we got $7.46 for them. So we'll be about $5 in profit on that as well. So guaranteed profit. Next, we've got HA, which is Hawaiian Airlines, and the current price on that is $21.19. So we've sold the 28. So I've checked this before I came on, and there isn't a credit to be had. We can't get a credit on it. So what I can't do is roll it forward. But what we can do is I'll let the shares be put to us at 28. We will then sell them again, and we'll get a credit. So we will end up, and then we'll sell another put, and we will end up in profit. Shall we have a look at that? Would you like to see how that works? I think several people have seen it this week, but
yes, please.
We got the premium that we got for it is $5.10. That's what I've been aware to check. Okay, so on Monday we will have had these particular Hawaiian Airlines shares put to us at a price of $28. So we start with the calculation with minus $28. So we're at minus 28, and then if we sell the shares, and if it was at the same price as now, it would be plus 21.20. So I'm going to do plus 21.2.
I've got it now.
So that means we are $6.80 underwater.
Mm.
However, we've already had $5.10 in put premium. So that's plus 5.1 equals. So we're now $1.70 underwater. This will be after we've sold the shares and taken into account what we got for the shares and the premium.
Mm.
So if we now go to the option chain, we now need to sell a put that brings in at least $1.70 to be in profit.
So that's on top of the 28, is it?
No, we've had minus 28.
Oh yeah, okay.
We've made up for some of that by selling the share for $20, wherever it was.
Yeah.
We've made up some more of it by having had the put premium of $5.10.
Yeah.
But we're still $1.70 short of profit. So in order to get $1.70 we need some more money in. And if we look at the 28 and the bid will actually give us $7. However, we don't need to sell the 28. This is for January this time. We could go down as far as, and we wouldn't, but we could go down as far as selling the 21 and we get $1.90. If we go to charting, and here is HA, so we're saying it's down here. There's lots of headroom above it. You could even consider selling the 29 or something. Certainly there's the 27. The top of that little peak there is the 23. So the gap that it's got left to cover is tiny. And if we look at the indicators, they're at the bottom, ready to turn. So we can very happily put that in profit. We might even not have to go as far forward as January. In fact, we'll have a little look and see what is available. We'll go back to the option chain. Try December. So again, we're looking for $1.70, and we could go to the $23, $22 in December. So we can very quickly get out of trouble on that. So we're definitely not going to worry about it. And we'll find the same. So we've had some shares put to as HE. We can do the same with any of these at any time. So we're just picking our moment on them. There's another one we've got for October, which is INFI, INFY. We've sold the 23, and the current price on INFI is 22.55. So if that one got put to us, we'd pay 23, and they wouldn't sell at 22 because the price is in between. But I'm pretty sure that if we sell one call on INFI, we'd get our money back. So we can end up, and that doesn't even take into account the premium that we've got. So we'll be in profit on it anyway. And the next one would be so Enable. These are the shares that we got free, and we've sold a call on them. Now this is gonna be the 15, I think it was. Yeah, the current price is 12.53. It's come down. So when it was up there nearer to 15, we sold the 15 call and got $1 for it. It's very good. So that's another one which is set fair to go back up, but it won't do it until after we've passed expiration. So that's very good. It means we up to now on it, we've had sort of $13 whatever out of it free, and we've got 400 of them. Pets, October, that's another call.
Is that the one that did a share split, Jeff?
Yes, it is, with SWI, Solar Winds. So we sold a put on Solar Winds, and when they got put to us, we had to take the Solar Winds, and we had to, and we were given these Enable ones as well. And Solar Winds is up now as well, so that's good. We'll come to that in a moment. So we're at Pets. We sold a call on the 35. Pets is currently at 27.25, so they're not going to call away from us at 35, so that's all right. That's on the stock itself. Anytime we want, we can sell the stock, and then sell a new put and be in profit on that. So I'm just waiting for it to get to a peak. Oh, October 40, and the pink is at $39.89. Well, that's a call. So we've sold the $40 call. So at the moment, we'll just keep our shares. It's like 11 cents under the strike price. So that will be very nice. Thank you very much. Hopefully it then goes up. And if we want to sell the shares, we can, or if we just want to continue to collect call income, we can do that as well. We'll probably go for another call. And there was another one there. Yeah, SLV. SLV is at 21.73, and we have sold the 27. So let's have a look and see if we can use this as an example of kicking one forward on the other route, which isn't waiting for them to be put to us. See if we can get a credit on it. So SLV, I click on it, and there it is. It thinks I want to buy it back to close it. But I'm going to add another option to it. So we've now got buy back the old one, buy to close, and sell a new one, please. We've only got 100 shares of them anyway. We'll try January 1st, see where we're plunging, and we'll try the present strike price of 27. And this is nice. Look, it goes from 27, 26.50. So this is 50 cents price intervals, which is a very good. I like that. So at that, there is a small credit. So we could pay $5.30 for buying it back and get $5.45 for selling a new one. So that, although it's only a small credit, sort of 15 cents, we might get more than that if we look at the live prices. That's on top of the, where is it? The $3.17 that we've already had on it. So we'd just be adding to what we've got. I'm going to verify to get the live price. Yeah, it's still only 15. We might get a better return if we let the stock be put to us and then sell it and then sell a new put. But I just wanted to demonstrate it. But it's demonstrating for a profit.
So can I just ask a question? So if we do it, we'll make like $1 on it.
Not even that. Not even that. We're talking about buying it back for $5.25 and selling it again for $5.40 for a later date. So we'd make only the difference, 15 cents between those two prices.
And if we just left it, would it grow and
if we leave it, it will. If we leave it, it will be put to us over the weekend. What we've got is, where's it gone? SLV will be paying $27 for it over the weekend against the current price of $21.75. So we'll do the calculation again. It would be minus 27. That's what would be money we're going out.
Yeah. Then
we would sell it again for $21.75. That would leave us $5.25 underwater. However, we've already had $3.17 input income, so that's plus 3.17. So we've got $2.08 to make up. So if we go to the option chain, if we just then sold again, they don't even do a 28 at that stage, but we only need to sell a put that will give us more than $2.08. So we could, it's a 21 at the moment, we could certainly do even the 22, no, we couldn't do that last time. No. We could do the 23.50 or the 24 and be in profit. If we then add in plus 2.77, that would put us 69 cents in profit.
So it swings, it's hardly any difference really.
Well, it depends. That's if we go for the 24. Let's have a look at the chart. If it's doable on a higher strike price, then we could make more. So 28 sort of up there. So the highest it's been is actually less than 28. I don't know what we're doing right up there. Oh, just there. So that would be a stretch. This level here is a regular offender. It hits it there. No doubt it'll hit again. That's 25.80 odd. This level here is 22.30. So we probably would be in the right place. So it's not that we've been...
Jeff, the stochastics are over 80.
Yeah, so that says it's probably coming down, yeah.
It's overbought.
Yeah, it's overbought. So it's going to be coming down.
What did you say? What did you say? Stochastic.
The stochastics, if you look at the bottom.
We're looking at these here.
Oh, yeah.
So the bottom one's way up over the top. And that means it's in the same way as when it was at the bottom, it turned around and went back up. Every time it's been over the top of that line, it turns around and comes back down again. So that's following the price, or trying to anticipate the price. So that says it's coming down. Can't quite see that for the price there, but the MACD, these little bars, they go up and down there. So it's not fantastic. The RSI is also down. It's been at the bottom, it's been up. So the chances are it's going to come back down. However, it probably won't stay down. It's just going up and down. That's what they do. So if we're going to kick it back one way or the other to, let's give it until January, as it's got to go down and come back up again. It's not a big difference either way. I think we definitely probably should take advantage of bringing the strike price down, which means not just rolling it forward for the 15 cents, but having the stock put to us, sell the stock and sell a put for a lower strike price in January. I think that's what we should do with it.
Yeah.
In the light of the fact it's going to come down. So we don't want to be stuck up there holding it at 28 if it's on its way down and didn't even get to 28 this time. All agreed?
Yes.
Makes perfect sense, as one would say, but spelt with a C. What's another call? TRP, $50 call on TRP. The next page of prices. They can buy them from us for 50 instead of paying 52. So we will probably lose those unless they come down by a lot tomorrow, which they're not going to do. And TR, so that's that one, that's TRP there. And that's it for those. So there's not a lot more we can do.
Jeff, will we have made money on that? Because if we're buying it for
Which one?
TRP.
What a question.
I mean, of course we're going to make money on it, but could you just...
I will.
Sorry.
Yes, I will. Let me... so let's have a look at it. So TRP, it will have been put to us. So we won't have just gone out and bought them. And I have a record here, which will tell me. TRP. There it is. So I can tell you that we got put income of $5.50 and we got 40 cents for selling the call. So we've had $5.90. Okay.
Yeah.
So, and we paid for them $50. I probably wouldn't have sold the call if it was in danger of losing money. So on that one, it's $50 out when the shares were put to us at $50. It's $50 back in when we're now about to sell them for $50. But in the meantime, we've had $5.90 in income. So $5.90 over 50. Yeah, we've had 12% on them. So
very nice.
I very rarely sell a call at a strike price which won't make us money. However, moving forward, I might be tempted to do that because there's something we can do that I hadn't actually realized. I still learn stuff here, which is in the same way as we can sell a put and then buy it back and sell another one, so roll it forward. We can do the same with calls. So we can actually sell a call, and then if we didn't want this to be taken away from us, we could actually buy it back and sell another one. Let's just check the prices on that as a learning exercise. Let's have a look.
The margin on that's going to be very small, isn't it, Jeff? Because the call premium is normally in cents rather than dollars.
Yeah. But if imagine that we didn't want the shares taken from us because we'd sold a call that was at a strike price below what we'd paid for them, then we might think differently about it. There isn't a January, so let's just have a look at February, see what they're doing. So if we wanted to, we could retain these shares and get another $1 of income. It's 260 by 350. So it's actually that would be 90 cents rather than $1. What do we want to do? I'll just check November. It shouldn't work, but it does.
20 cents.
20 cents. So yeah, it would only be a question of if we think these shares are going to go up by a lot, we might want to say no, we'll just hang on to them, thank you, and see what happens. But it'd be the first time I've ever done that.
Should we look at the graph to see if it's going to go up?
I've just looked at on my other screen then, but we can now look at the graph on the other screen.
Value line is saying 65 low, 100 high, 3 to 5 years.
You can't quite see it there, but it has actually gone up for the last 3 days, and today it's up by 1.7%. It is heading up. There's a major point of resistance there, and here, and so on. It is forecast to go up. So I mean, the other thing that we can do with it is hold on to it and sell a higher strike price call. Yeah, so as you go up, you see it comes down. So that's no good. So what do we think? Are we happy to let them go? We bought them for 50, they go at 50. We've made $5.90 already on them. Or do we want to make a little bit more money, 20 cents, kick it forward, quite a long way in time to February?
The thing is, if we do that, there's a risk, isn't there? That is there a risk that we might not get what we've got now? Might it erode?
Yeah, Mike. If the stock price, it's quite a long time. The stock price could easily go down. It's been down as low as 45 in recent history.
I think maybe I don't know what anyone else thinks, but maybe we should do what you were going to do. Do it now.
Do what?
Yeah, well, I don't know that thing now rather than kick it forward.
No, we don't have to kick it forward.
I mean, take the money now.
Right, so let's just do it again. So we've got it's the October 50 and the price is 52.49. So as we stand, they will get they'll get called offers at $50, but we only paid $50, and we will keep the 40 cents that we got for the call option and the $5.10 that we got for the put premium when we bought them. So we'll just all move to profit. Yeah.
Yeah.
No problem.
What do you think?
So the graphs that underneath the asset allocation.
Yep.
And underneath, so yeah, this area that you got month by month, historic growth. On the version we've got that came out, that's not there. The bottom, there's nothing below the share.
Yeah, because this was done in, well, the one that you've got was done in readiness for the training session that we had on dashboards with Owen.
Oh, okay.
And he had his helper in the Philippines do it for him, and she missed this off. So it was too late because he didn't look at it until we actually got to the session. So the following day we said to her, look, you missed some off, get this put right. So she's then done another version of it, which is this. So she went off and did it again. I'll send this out tomorrow with the video link for the recording. I'll send it out then. And it won't have been updated. It'll be the one that you're looking at now. So let's see, what have we got on here?
Go to the top of that screen.
Look at that. Almost beautiful, that.
So do you in your head say that so far the group is on 39%?
I do, yes.
In 8 months?
I do, more than that. It's not what I quote if asked. I don't say we've made 39%. I would, at the moment, and this was done during this low that we've had, and say we made 9%. But I know there's 39% plus in the pipeline.
Because of the drag?
Yeah, well, it's not only the drag, it's also, if we put, as we did, I think this week, say you stuck $40,000 in or something, then it's a percentage of that plus the $40,000. So as new money comes in, the percentage falls.
Yeah.
The profit doesn't fall that we've made. but the percentage does.
Yeah, because it's
Right.
a certain amount of profit over
Yeah.
more money. It's
Yeah.
over more money, isn't it?
So I mean, the way I actually measure it is, and I haven't got it on this screen, is I look at £1 invested on day one 8 months ago. So I have a dummy member that's only got £1 in, and so okay, what's that pound worth now? That's how I look at the profit. After that, it's well, okay, yes, someone's put money in and it hasn't been in as long as that pound or whatever. That pound is the pure profit.
So how have you done that? Is that on Excel that your £1?
Yeah, you know the horrendous spreadsheet that I send out at the end of the
Which
quarter.
horrendous spreadsheet, Jeff?
The one at the end of the
Narrow
quarter.
it down.
Yeah, I use that for it. If you look at, I think I'm on the top. Mine doesn't get adulterated by training costs or research costs. So if you look at mine, that I haven't put anything in since that first date. So whatever my percentage is what the percentage is. But what I've done already for Sapphire and Fortune is said, right, okay, we've arranged so that each month we definitely get this dashboard. And by the way, there's still some of this dashboard missing. The bit that's missing is to say of the option drag, how much of it is due in October, November, December, each of the forthcoming months. So that's when we expect to see that money coming through. And then the new tab, which we'll do monthly, will show the individual positions. But in this case, it's in the case of Diamond, that's going to be the position since the end of August when we did the full profit workout then. So you'll get sort of 2 months of these things and then the full one at the end of the quarter. So it's like a progress report, really. To be honest, it doesn't actually take that much doing. It takes a bit of setting up, and it takes a bit of working out as to what I should put on it. But after that, it's only clicking. It's only clicking. Any further questions, points, or good jokes, or anything else?
No. Well done.